Good. Okay, well, welcome everybody to this webinar for FX Street on the 12th of September 2018. Yes, welcome to FX Street live webinars. Today we're going to talk about how to refine your entries, because this is a pretty important topic. A lot of people might be quite good at finding entries, but or rather the area where price is likely to react, and then price will potentially move against them before it moves in their direction. And there are some small clues we're going to discuss today. We'll use maybe half an hour or so on it, maybe have time for some questions when we're done. That'll make you better at identifying these little areas, these little clues that you can teach yourself to spot. Okay, so let's find something nice. Okay, let's have a look at this. This is the euro US dollar. So what we do, I mean, supply and demand is ultimately about finding imbalances in liquidity, bearish and bullish liquidity. And this is the way I think you can trade and do quite well. Rather being dependent on a lagging indicator is just a really bad idea, because this is ultimately going to get you into trades when the move has already taken place. And so what we're doing is we're trading at the extremes, selling at supply and buying at demand, which is typically where big institutions will be positioning themselves to trade as well. So if we have a look at this little structure right here, you see how price went up, we moved sideways for a bit, we came down, we went up, and then we left quickly, and then price moved into this area pretty far. You know, we probably went 80% into the area before we managed to find sufficient liquidity to move through the thinner side of the market, which would ultimately be to the downside. So what we're going to do, what I like to do is I like to mark off the high. This is, of course, the post-trade analysis. So the post-mortem. Then I go to a small time frame, like the 15-minute chart. And I'm going down and I'm having a look in here, and I'm wanting to assess why price turned at that level. So what I'll do is I'll have a look at here. Here we have this little, before we do that, I need to draw this, just so we know we've got the right one. With a 15-minute chart, you can see, yes, this is where we wanted. So if you were to trade this as a 4-hour area of supply, your entry would have been here. And this is providing that you do not do any further analysis on smaller time frames. I always recommend that you do this, and this is what I'm doing myself as well. So I'll see something like this, I'll mark off the break point here. So we had this nice period of accumulation, price went up, and then we cut away. A lot of trading models say to sell at this area, but you're giving away a large quantity of your position, or you're exposing your stop to being hit if you're not going down and having a look at the smaller time frames. So what I do is I do that. I go to the time frame, which is maybe like many times smaller, 4 or more times smaller. So if we have a look here, you can see that. Get the trend line, we'll mark off this. And this is what I'm interested in. For this trade, I probably would have got in around here, just here. And then you might ask, well, why on earth would you get in right there? And here is the logic for that. Let's zoom in and have a closer look. Okay, right, so we formed this top. Price came up, we're moving, you can see that we're accumulating. We go up, we have rejection. Price continues to move higher. Does this mean that we want to buy? No, it means that you have to let the liquidity be distributed at this area. What kind of liquidity is it? Well, it's bearish liquidity, and this we know after price has moved. So you're not sitting in here guessing, okay, I should put a buy order in, I think it's going to go up, or I should sell, I think it's going to go down. You're not doing that, because that's going to get you in some trouble. All you have to do is you have to allow this to happen, and then you watch price move away. When this happens, then you go up and you have a look at the smaller time frames to see if you can find a better area. So we have this area of accumulation, this one here. So we have these 4 or 5 accumulation candles. We have this candle, which is the one that left. So ideally, what you would do, you would identify the candle that left the area of accumulation. And this is different than this because we have a rally, accumulation, and then price sold off. Okay, so we actually had an area in here like so. This is not demand, but I'll always do this to help me find out where I need to be looking to sell. So we have micro demand here, rally, accumulation, rally. Price did not do anything. It kind of just meandered into this area. We know that we are at a greater period for our supply, and so we have a very good we have a bias, a directional bias. And so what you do is you mark off this, the last area of demand, and then up into this apex here, you look for the area of supply that took this out. And which one is that? Let me move this one out of the way. Let's delete that. It's this one here, because if we focus on this candle here, it's this candle, this here, that took out this supply. So demand, supply, this supply moved through this, so consume that. What does that mean? Well, that means that we have a lot of interest in selling at this area just here. So you mark that off, and then you look for the highest retracement prior to the release. And this is a release, and you can keep moving back, and then it brings you to this area here. And this is price going down, moving sideways, going up, going down, and closing. And this price moving up in the vicinity of the lower edge of this area of supply is an arrow. And this arrow is telling you where the sell zone for this area of supply will start. And so ideally what you need to do, let's go to a different time frame so we get different colored rectangles, is you would start to sell. You start scaling in from here, and you would keep going until price reaches your entry, which would be in here. So this is the beginning of the sell zone, and this is kind of the last price window. So this is the window for selling. If price comes in here, you start selling, stop. And you can, of course, you can sell up here, but the likelihood of price continuing beyond this is slightly lower because we've gone down and zoomed into the smaller time frames to find the details of what's going on. And so this is ultimately what you would be doing on this one here. So we zoom out, go back to the 4-hour chart. We see how did we do? We had this one here. So price moved against you about 5 pips. I mean, your stop would have been above this. Let's have a look. So your stop would have been around here. So you would have had about a 12 pip risk, a tiny risk. And then you would want price to have moved a considerable bit away from this area of supply. So we had this area of supply, and then you want price to move down and beyond. So you want to see the move away to be multiple times the size of this area of supply. In this case, we had a tremendous risk reward. We had about 13, and it went down. I mean, all the way it went 107. So incredible risk reward in that trade. Are you going to get all of it? Likely not. If you look at this here, you can get kind of get an idea of where you want to be out of this trade, because you can see there's something down here to the bottom side that's telling you that you want to be out of the trade before price comes back down to here. We know that this is interesting because, I mean, price rallied, it came down, it tested this once, it tested this twice. You see we have lower highs, but this area of demand is continued to be respect. So this is ultimately where you would target to get out of the trade. Alternatively, you could look down here, which is a nice fresh untested area of demand. And you know this has been tested 1, 2, 3 times. Each time it goes a little bit deeper. This tells us that that we have a thinning out of the liquidity going on. So the deeper price comes, the more the liquidity is being consumed. The exact same as what we saw in here on the 15-minute chart. Hence our logic in identifying this as the beginning of the sell zone. So price went up to this area. That means liquidity, theoretically speaking, has been cleared out. So you want to start selling from here and up. Okay. All right, let's do another example. Let's just put the template on. Right, let's do the dollar CAD and have a look here. So let's identify an area now that we could consider for trade. So something that hasn't happened just yet. Let's go to the daily chart and see what's going on. Okay, you can see here that we had market structure, which was going down nicely. We managed to break market structure, and now we're moving higher. That means that it doesn't mean we're in an uptrend. It just means that we're having a breather from our downtrend, because technically speaking, price could just move higher and then continue to trend down in kind of a parallel channel, maybe something like this. Just because the price comes down here, comes up here, moves down. And so we don't know. For this to be a technical uptrend, we want price to consume an opposing area of, in this case, supply. So you'd want an area of demand to be formed here, and then price to move through this, which we don't have yet. So we're just having a breather. So we still have a technical downtrend for the time being. But what we do, we'll have a look at this one here. So you see this nice area. Price went up, down, up, and then we moved down. So we had a bullish consolidation, and when price moved down here, then we had a bearish trend on this here. And now we have something similar going on. We have kind of this going on here. So price is kind of wriggling down, as you can see here. So we have demand being consumed by the supply here. So price is moving down. So what you want to do is you want to identify an area that you think price will potentially react at. And if we have a look both to the downside and the upside, I mean, this is a really big sell-off. Okay, so that's a warning sign to buy for the time being, because this is a very strong move. This is not a very pretty demand. We have a little bit of demand down here. Okay, just here. We're getting close to that, the 130.17. So what we're going to do now is we're going to go down to the small time frame. We're going to have a look in here. We're going to find the beginning of the buy zone and the end of the buy zone. So we go to the small time frame like so. We'll go back and we'll have a look. If you have a look here, you can see that okay, so we had the candle that left. We have the accumulation here, here, and here, 3 periods. Price went down, sideways, and then up. So you actually have the edge of it just here. So this is a very conservative entry, because we have the edge like so. We'll leave a few pips for the stop. So this is kind of the edge, the rough edge of the area, and this is kind of the more conservative entry. You save a few pips, I think, at that level. Let's go to the small time frame and see a little bit deeper what's going on in there. Sorry to make you all dizzy by doing this. There we are. Okay, so right now we have this. So now, I mean, it makes perfect sense, because you can see this candle pull back, but what we didn't see on the other time frame was this. You can see we had, but it came down, the price came down, we accumulated, then we went up, we came down, we moved sideways, then we left. And so this is now the area that we would consider to buy from. If you're worried about spread and not getting to the trade, then you would take this area up here. So like the edge of the area like so here. But if you want to have small stops and be careful, then you want to go down and have a closer look on these smaller time frames, because this is price rallying. We didn't really push away very well, and then price kind of touched, we accumulated, and then we left. So there's something around this area here that's telling us that price is probably going to have a bounce down there. So you can put it like this, like so. So if you have a look, I mean, that looks okay. Then you can ask yourself, okay, is this a child or a parent area of demand? Well, this actually looks like it's a child, because it's reacting to this. So you go to maybe a bigger time frame here, if we can even see it. You can see it very clearly here, how we had this nice area just here. Okay, so we had 15-minute, 30-minute area of demand. It's been tested once, and then it's gone up. Knowing this is the area that I would want to begin to buy, because this, for me, is a much better area than this one here. This has all the characteristics of a very nice area of demand, because price came down, we accumulated for only one period, and then we shot up. But I like this better because price kind of wriggled sideways. We popped up, accumulated, then we popped up, and then this whole move originated from the test of this area here. This is kind of the lowest test. So essentially, we're doing the exact same thing as we did a minute ago, but we're doing it on slightly bigger time frame. So we can remove these. And then we look for the edge of the buy zone, which is there. So the edge of the buy zone here is 29.98, like that. So this is the edge of the buy zone. And it goes down to here. You probably want to take it below this here. We have another one down here. Let's have a look at this. We'll mark this one off. And we'll go have a look at the smaller time frame. See if we can find it. Yeah. So this is what we have. Is that the right one? Yes. So this is the right one. So we have actually something going on. So we had price coming down, rallying, moving sideways, up, sideways, away. So we have the big candle. Where did price originate from? So what was the deepest retracement just prior to this? This one here. So this is where price originated from. So the 129.27. Okay, so keep that in mind. You can consider those when you're trading. So you can take this one. You have to engage in the market in order to understand it better. But you can have a look at this one. This is a nice area. Been tested one time. It'll likely hold. We're going to likely get a bounce. We are at the 1.3 as well, so that's a significant area. But we have this here just next to this, which I don't think is very interesting, how price kind of went up and went up and down, big candles. So this is clearing out liquidity at the area as well. And price rallied, accumulated, popped up, came back, and then up. But if you're in front of the screen, put a line, mark this line off, and see what price does once it gets there. We've done the same thing over here, and we've identified the edge of the buy area, and in here this is the one where price pulled back before it released to the upside. And you can see it makes very, very good sense when we look on these time frames. I mean, we have price kind of forming a base, we had price leaving the base, moving above this high, and where did it originate from? Well, it originated from just down here. This is a bit of a messy one because of all of this, a lot of trading in here. But we can also think that assume that because price has been trading nice and efficiently, and then all of a sudden price popped away like that, that this is fresh demand. So this is new buys entering the market of this area. Okay, let's do another one. Does anyone have anything they want to look at? While I'm waiting for people to type, we'll do another one up here. We'll have a look up here. We have this really nice area of supply. We go to the 5-minute chart. We have a look. So this is what it looks like. This is actually perfect. Price wriggling sideways. We came down and we came up. We're looking at the edge of the area. This is it. This is the beginning of the sell zone. And then price dumped. Okay, so we could actually see that clear enough on the hourly chart, as you can see here. So this is fine. This is a very clear example here. So we didn't have to. I mean, going on to the small time frames did not give us any more information. So that's a nice area there. Okay, let's have a look at the dollar yen. Okay, so what do we have on daily chart? What's going on? So we have this, and so price is kind of wriggling sideways for the time being. I've marked this off up here. Just going to remove this here. Okay, so we're going to mark this one off here. We're going to have a look at this. I like this. We're going to go to the 4-hour chart and have a closer look. Looks like this. And then already now you can see here. So here we had price testing the area. So price came back, then it went down. So on the 4-hour chart, this is the edge of the sell zone, kind of leading up into this daily supply. And then we go to the 50-minute chart, which is where the magic unfolds. And let's have another look and see if we still want to sell that low. You can see here that this is where price left from. We moved up and then price broke away. And that's pretty clear. I mean, we're not getting any more clarity. We're not seeing any more price nodules in this leg as a result of us moving down to the smaller time frame. So we'll do it again. Nothing. 1 minute. See, I don't even know if I have enough data. Yeah, maybe. Okay. Okay, on the 1 minute, you can see now. So we had this one here, this blue one. Let me zoom in. And we had this one here. Because this, can I draw? Okay, draw. Yeah, I'll try. No, pencil. Okay, good. Okay, so this is essentially price coming down, moving up, moving sideways, and then going. Price coming up, down, and then down. So this one, oops. So this one is this, and this one corresponds to this here. Okay, and so we want to look for those micro areas of supply and demand. You're going to see them here. So instead of selling down here, we could refine our entry and move a little bit higher, and it's all in these smaller time frames. Okay, so even though I trade on the like weekly, daily 4-hour chart, I find myself often on the small time frames for entry purposes, just to find stuff like this. So this is the edge of the sell zone. So if you go back to the 4-hour chart, we'll have a look. I mean, this is the edge of it. And if we have a look here, we have like a very clear pattern. How we have price moving away like this, like this. So this is what we're essentially looking at. This is the edge of the sell zone, and this is where we move into the thicket of the liquidity here. Okay, so ultimately above these highs, which is where we have some uncharted waters here to the upside. Okay, let's have a look lower and see what do we have. Oh, we have. I mean, this was okay. Let's have a look at this one here, because it's nice when you can see after the facts. You can have a closer look. Let's move an area to draw this off like this. We go down to the 15-minute chart, moving sideways. Okay, so here, where do we have it? Right there. Right. We want to see if we can get a better price. Go back. No. See if we can even see that. Yes, here we are. Yeah, okay, so we're going to put this one, we leave that there, and then we're going to move this higher. There. Okay, make that pink. Good. Go back to the 4-hour chart and we'll see how price came into it. Yeah, price came into it. Okay, so price came through the first one, and then it went up to the next one, but we didn't close above any of these lines. Price went through those. We found liquidity. We entered the sell zone very clearly, and we saw price close below it, kind of so pull away. Then we accumulated. We came back up to the first one once, almost twice, and then price started to accumulate. Then we started to have these lower closes, and then essentially this is where price departed. Okay, we're seeing this all the time. Let's have a, sorry, there's a question here. Hey, Carlos, good to see you again. Okay, when grading these imbalances, one of the parameters I believe strengthens the case for the areas where price is most likely to bounce is the extended rated candle and its close. An ERC candle doing closing within 30% or higher of its range makes it a strong area. Yeah, for sure, because I mean, when you have a candle like this one here, this green one here, or this green one here, or these here, I mean, it shows you that, I mean, there was no, I mean, there's very, very small wicks, and that is just telling us that we had a lot of selling. Boom, there's no wicks, neither to the upside or the downside. If they're closing like this, you can see like the close here is almost the same as the low. I mean, that's showing us that the buyers were absolutely not getting their way whatsoever. Okay, and then price kind of moved away from there. I mean, departed pretty nicely. But the problem with candlestick patterns or candles is that, I mean, my server here is GMT +3, and you might be using GMT +2, and some other traders are using GMT or GMT +13, and so it makes seeing candlestick patterns or using them quite difficult because everyone's looking at something different. If we were all looking at the same information, I think that would make things a little bit easier. And then of course I'd be more inclined to incorporate candlesticks into my trading. But you're perfectly right in saying that you have a big body like this candle here on my chart is probably going to look similar on someone else's charts. Of course, there can be some discrepancies to that, but generally speaking. Okay, let's have a look now at this one here. So first of all, we're going to find the candle on the left. It's this one. So we go from here to here, like that. I'm going to go down to the 15-minute chart. Okay, and now let's have a look. We have a lot of those pullbacks. Okay, because if let's say we start our analysis here. Okay, one of the joys of living in the jungle is that we live in a bamboo house in the middle of the jungle, and there are animals everywhere, and we have a rat trap, and a rat just jumped in it. So that's the noise in the background I can see. Okay, so initially we had this one, and we go high, we go here, and here, and here. Okay, so here, this is where we have a little sweet spot. We're going to go from here to here, because that is the area, and this is the pullback into it. So this is pointing to the edge of the sell zone. Okay. Right, let's go to the 4-hour chart and see what this looked like, or how close we got to it. I mean, look at that. That's phenomenal. That was a really good, that one worked out very, very well. But I mean, here there's virtually no drawdown. We have maybe half a pip or so. So that's a very good example. If we just go back to the smaller time frame and have another look. Oops, sorry, what that looks like. You can essentially see that. Let's have a look here. Here. Okay, so we had the top here, and we had price kept moving back. And this is where we saw it here. So we had this one, and this one, and this one, and all of the other ones. And these are important because you have to understand that, yeah, we had a tiny one here. Yes, we did. But you want to try and focus on the bigger moves. So we had kind of this one here. So like these major swings, because there's always going to be noise. This is just the market breathing and working. Price has to move higher and lower in order to find liquidity. So this is what this is doing. This is the market. This is kind of, yeah, the market living. Okay, these big swings, these are reactions to liquidity. This is just a really good example of that one there. So when price came within half pip. Good. Let's do another example. Have any questions about this so far? Is it interesting? Are you guys already doing something similar, or are you just putting in your limit orders and jumping in? Yeah, animals do a better job of protecting the environment than humans. Certainly one of the advantages of living near the jungle. Nice, Carlos. True, very, very true. But here in Bali, I mean, there are pythons and cobras, king cobras and spitting cobras and white-lipped vipers and scorpions and absolutely everything under the sun. And so just a different environment, slightly different than Denmark. Okay, cool. Well, let's have a look at this one here. So let's try and find an area where price is likely to move. I don't think it's going to hold because we have a high, low, lower high, and a lower low. So we have supply being respected, but we're going to mark it off anyway. Yeah, very low, Carlos. Yeah, we got a moving in presence from some friends here, and they bought us a book, The Reptiles of Bali. So I've been studying that pretty closely. Right, so if we mark this one off here. Okay, that's good enough. Go to a 5-minute chart, and we're going to do the exact same thing and move this over here. Okay, cool. So here we have the edge of the area here. We have this leg here, and so we want to see if we can find something on the smaller time frame. And you can see here we can move it off. See here we have this micro area. Sorry about the hiccups. Just in here. You know, we won't bother with the rectangle. We'll just put the line in. And so this is where price pulled back to. In price, it rallied, accumulated, and then it pulled back. And this is where price went, because you can see that since price left, it has not been back since. There's black space from this candle all the way into the future. Okay, so this is a really interesting one. So you know what, keep that on your charts. 111.13, 111.14 on my charts, 111.137, and just see what happens once price gets there. Put it on the 1-minute chart and watch price as it pokes into there and is rejected and has another go and has another go and comes back and so on and so forth. It's very interesting because you can see very clearly how if I can pencil, if you have a level here, how price will come back to it, and depending on how many buyers there are there, price will go down, and then it'll be rejected, and then it'll come back and have another go, find liquidity. Oh, we found some, a little bit more, and then more price will leave. And so you see this on the 1-minute chart. It's really, really interesting, and it's just a really good study to watch what price looks like as it's reacting to little price nodules like this one here. Yeah, this is also an interesting one because this is kind of a bigger move and then kind of a pullback and then release. This is again 1-minute price action, and so it's pretty tiny. Okay, so we'll do one more. We'll do the, I don't know, the euro yen. Let's have a look. What do we have? Well, we have, what direction are we moving? We're wriggling lower. We found some buys down here, lovely area here. Now price is moving higher. So let's go to the smaller time frame, see if we can find something maybe intraday. Let's have a look at this one here. This is a nice one. It's like so. Let's go to the 5-minute chart and look and see what we have. Okay, so we have, this is like a micro swing. We have this one here. We have another one here. We have another one above. is a tiny, so if we have a look on the 1 minute chart, let's hope that I can see that on the 1 minute chart. I'm not sure if my broker's giving me data. There they were. Okay. You can see it here. Actually, is that it? I'm sorry, making everyone dizzy. Okay, so we're way too far back. Let's move back slowly. Good, here we are. Good, so here we have them. And here you can see them again, how price comes up, we pull back. I mean, this is a tiny one. I mean, so this is uninteresting to us, but the one that's more interesting is this one here, because this is kind of like the pullback. We had another one here, another pullback. And this is actually a really nice one, just here. So this is, we have three interesting areas here. So mark these off as well, 130, 62, 59, and 56, to see which one price stops at. It's just a matter of getting, just investing a bit of time in watching how price reacts to these levels. This is a pretty nice release from here. So I'm thinking that price will probably come to the 130.56 area between these two, and then find some resistance. You have another one here, tiny one. We'll just mark it off like this. We can do that as a whole area, how price came down, accumulated, left, back, boom, gone. So this is the area now that might be interesting to see if price has a reaction at. There are a couple of things we can keep our eye on. Oh, this one came close to the bottom one. That was very interesting, actually. And when we mark this one off, we didn't really know what was going on there. And you don't see anything there, do you? I mean, you think like, oh, there's nothing there. But on the, come on. But on the 1 minute chart, oh, getting lost here, all these lines. There. Is it? Yeah, so we have, oh, there was a 5 minute there, that's why. So we had price kind of come down and test and then go away. And this was pretty much where price went back to. We actually went back to this one here, the first one. So if we go back to the 30-minute chart, never mind, I'm getting all of my lines mixed up. It's one of the joys of MT4. Anyway, we'll leave it at that and open up for questions. You guys have any questions about this material? Are you guys doing something similar now? Is it interesting to get into such detail, or is it maybe too detail oriented? Cool, Mark. Well, you'll find that, I mean, the more you do it, the quicker it'll go. It'll go super quick. All of a sudden, they go really quick. I mean, we have a look at this one here. What I do is I just mark it off like that. I get a line, mark the first visible pullback. I'll go to the 5 minute or the 1 minute, and I'll have a close look. What do we have there? I'll say, yep, that looks pretty good. And I'll say, cool. My entry is going to be here. My stop will be over the top. Done. Next pair. And so on and so forth. So it goes really, really quick. I mean, essentially, I mean, the whole thing about trading is that you want to. I mean, the reason that people do trading is because they want to earn money by doing less. So you don't want to. It's not like clocking hours at the office. As you use your time as effectively as possible, and you don't use any more time than necessary. So you make a checklist for things that you need to do in order to identify trade setups that fit your mindset and your trading model, and you learn to walk through those steps as quick as possible. and you don't want to spend any more time than that. I used to think that I had to sit in front of the screen for 10 hours a day to trade, and I got burnt out. I learned a lot about price, but I got burnt out, and I thought it was an absolute bore. And so I really try to make sure that this isn't something that that I do anymore. I don't want to sit in front of computers anymore. I want to be with my kids and and do other more fulfilling things. Trading is just for income. That's it. Good. Any questions before we wrap things up? We've been going for 40 minutes or so. Nothing? Good. Very good. Okay, well, I think we'll wrap this up then. If any of you guys have any questions, I'm going to put my email address in here. You can just shoot me an email with your questions, and I'll be pleased to respond to you. Hey, great pleasure, absolute pleasure. Yeah, and if there's something like a topic you want me to cover in the next symposium, shoot me an email and tell me, and I'll be absolutely thrilled to do that. That'd be a real pleasure. Hey, FX Street, thanks so much for having me. I really do enjoy these, and I'm glad the internet's working better this time around than last year when I was here. So for anyone who's interested in going to Indonesia, Bali is a really nice place. We moved here about 2 months ago, sold everything at home in Copenhagen, and put our kids into a green school. It's called a green school, Bali, which is essentially a school with primary focus on sustainability. And it goes from kindergarten all the way up to 12th grade, and it's absolutely amazing. So we're really thankful, grateful for being here, and we're enjoying everything here. Yeah, and so from Bali, I thank you all so much for being here, and I look forward to seeing you all in the next webinar. Thanks so much for being here.